There once was a market from hell. Many traders kept trying to sell. Every dip brought more buyers. Each new high brought more criers. But stay alert. At a top, there's no bell.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone exciting, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week. Hopefully, lots of great ideas and opportunities for you throughout the show. Well, stocks continued to churn on the upside as rotation just kept giving the market a lift as individual stock groups kept showing up with more buyers. Financials and HMOs, healthcare stocks, they gave signs of peaking with some pretty good selling coming in. It's important to see that banks' revenues based on earnings were not all that good. Growth just doesn't seem to be coming in as was estimated in a period of rising interest rates. So that has investors unnerved when it comes to the financials. We're going to get a lot more financial earnings coming out, and I think that the financials have topped. That could be significant. IMF also names 5 banks worldwide that pose systematic risk, and that's including Citigroup. So Citigroup got some pressure as far as the group that looks like it was trying to get the market to stall, but overall buying seems to keep coming into this market. Healthcare, the issue there was that POTUS signed an executive order to end CSR. That's his attempt to kill Obamacare completely on his own. That's the cost savings reductions, essentially the subsidies that go into Obamacare. But then, as those stocks came under pressure, buying did come in, and materials, steel stocks, commodity stocks, as commodities have really gotten strong in here. And actually, everything we're looking at as far as the markets go seems to be rising altogether here on Friday. As far as the steels and material stocks, POTUS signaled, well, for a NAFTA agreement, that arrangement would be favoring U.S.-made steel and U.S.-made copper and plastic resins. And who knows if that's going to fly, but investors really getting in front of that. We had the steel stocks on our list of stocks to perform on the upside in a market rotation. Just did that video a couple weeks ago. And we also had these healthcare stocks, a couple of them on our list of the 29 riskiest stocks for the fourth quarter of the year. We'll talk about how you can become a member in order to see those videos. So the 60-minute chart that we look at every week is a chart that shows, basically the trend of the market and what the news was. The last 2 weeks, there's been almost the identical thing. Any little dip has brought more rally, and we've continued to see a mild upward trend as we look at this chart. Here is our 60-minute chart of the S&P 500, and you can see as we look at these 5 days in here, the gray area is the overnight trading, the white area is the trading during the normal trading hours during the day. And you can see we've had this, well, modest uptrend. We had the exact same thing that we showed you last week. Monday, strong world markets lifted futures, and you can see there was some buying overnight, but then selling came in on Monday as the market tried to correct. No real news at that time. Here tech stocks started to get sold, but they started to get bought on Friday. So this rotation, you just have to, it's a kind of a guessing game as to which ones are going to going up and down on a daily basis. So the market sold off, but you could see by midday it made its low and then came back. On overnight here on Wednesday, the Nikkei made a 26-year high, and the Japanese yen is starting to look better to us. And that little rally brought some selling during the day, but then the market rallied because it seems to always want to rally into the FOMC minutes, and you could see that it did that. And the FOMC was just completely split on inflation. They were not very sure about a December rate hike. They were iffy on that, though they were leaning in that direction. So that bearishness, or kind of a reversal from what we're hearing is a little more hawkishness, helped the market move up. So that dovish feeling carried into Friday after the opening. You see it kind of slipped back overnight, but then the dovish Fed then started to bring a lift in the market again. Bitcoin on Thursday over 5,300. Bitcoin on Friday 5,800. And man, that is starting to bring some buyers in the gold markets. They are definitely related in my mind. And that's really what's going on here as far as the precious metals. There is some kind of a move into safety, and with bonds moving up 1 full point here on Friday, that is definitely, you got to make you wonder, who's moving into some positions of safety in advance of what could be a coming market correction. Friday, you see just this choppy movement going on right here, and a little bit as we move into the final hour of selling coming in. We'll wait and see if that is meaningful, but the S&Ps have been up to the upside all day long. Now only up about 3.5 points at this time, but the Nasdaq's up about 23, so the market's still higher, as you could see, and this moderate upward churning uptrend is continuing in the market. So for the stock market this week, it hasn't been all that big of a gain. As a matter of fact, most of the major indexes are just up a small fraction here, and the Russell is actually on the downside by about 0.5 percentage point. So tiny little gains for the stock market during the week in this modest upward churn. The range in the E-minis, including some tails of selling in there, so that rebounded and some buying spurts that fell off, was a total of about 15 points, maybe 16. That is an incredibly small range for a week's period, and that is what happens when essentially buyers meet sellers and markets start to churn, is that you start to get a narrowing, and at some point that narrowing brings a widening, and it's yet to be seen what direction that will be in. Of course, in my opinion, that direction should be to the downside. I'm going to show you more of that as we look at the short-term view coming up pretty soon. Bond market had a very strong weekend here as we were looking for an intermediate low to form in about a week. This one looks like it came early. 30-year bonds up 2 points. Very strong week, a little better than that. The 10-year notes, the interest rate moved down 9 basis points to 2.27%. So a very, very good move in the bond market, down move in short-term interest rates and longer-term interest rates too. The dollar was soft. Now, that often happens when interest rates fall, the dollar softens, and the inverse to that is gold then moving up. Dollar down about 0.75 point, but the gold market moved up about $25 to the plus side, and this is 6 days in a row. Every single day this last week, gold has been gaining. Silver up about 54 cents on the week, following copper and base metals, the DB GDB ETF index that we've been bullish on and talking about. So silver and gold moving up strongly. And when I look at this move in the bond market, and I look at this move in the gold market, money moving into Bitcoin, there is some money that has been sneaking out of this stock market into some places of safety. And I know we don't see it in the stock indexes yet, but there's some kind of a message there that we have to keep our eyes on. Oil market, it gained back almost all of what it lost the previous week, up about $2.25 in the week. So a strong move in the oil market. So that limerick I opened the show with, written by me, it implies the pain that I hear from traders as they contact me through emails and tweets, and that's common for traders, because traders often have a contrarian attitude. Anyone that has been trading the stock market for over 8 years knows how rare of a period this is in the stock market. One of my mentors, and I remember one time when I was struggling in 1976 and meeting with him every day in the morning for a week before the market opened up to get myself back in gear, he made a comment that always has stuck with me, and that was, you always want to get caught long at the top of a market, meaning that, stay with the bias, stay with the momentum. Don't worry about, that the market's going to reverse, because you'll make enough money that if you stay with the trend, you'll be okay when the market reverses, and then you'll actually see it reverse. I think of him often, and that's especially when I hear other mentors telling traders that if you don't stay short when the market starts to sell off, well, you're never going to get short. And there's a lot of fallacy in that, because the truth is that I've traded in 9 or 10 bear markets and countless major corrections in markets, and they never do ring a bell at the top. They never tell you when it's going to top. So that's true as far as the mentors that say, well, you got to stay short. However, in almost every single case when a bear market hit, there was a decline off of a top, and then the market bounced back again, because when this market falls, nobody's going to believe it's for real, because everybody has seen this market tick up almost every single day. So what happens is the market falls, and then there's an opportunity because the market rebounds, because everybody believes that decline is over. Then when the second drop hits, that's a good sign that there is trouble in the market. So you can see how much you have to wait, how much you have to look forward to see whether or not a real top is forming. In the meantime, staying short in those kind of markets, well, it's a huge problem. And the problem is that traders get stuck, and they're biased by their loss. They're biased by their positions. And every single day that the market keeps ticking up, it's extremely painful for them. Yeah, even I just talked about signs that I see that the market is falling, and I believe that there is a lot of risk in the market at this level, and the market will decline. A decline will come, a top will come, a bear market will come. I promise you that is all true. However, the lesson here is that you have to trade the environment that you're in. And you in this case, the environment we're in is a market that, the buyers are just nonstop. So you trade the market that you're in. You don't trade the market that you hope you will see. So that's the difference. Trade the one you're in and not the market you're hoping for. That's the lesson on the markets for today. And right now, coming up is our best and worst for the week. All right, every week we do this. We look at the best and worst stocks for the week. Before I do that, though, I'm going to talk to you about a great offer that we have for you. You've seen the video that we bring here every single week. We put a ton of work into it, a ton of information, and what we want to do is me trading for 43 years, man, have I ever learned a ton about the markets. And what we want to do is we want to bring to you an opportunity to see all of the videos and everything that we teach and what I've learned in all of these 43 years. So I want to tell you about our video library and what's in there, and give you an opportunity essentially to binge watch what we produce for a whole month for just a ridiculous special offering price. So these are the videos that we produce every single week. We have 8 video categories in our library. That is our level 2 membership. Over 250 videos in there. We do 4 new videos every single week. And we kind of mix them up, though. We do Future Speak every single Wednesday, and you can see Future Speak if you become a member. We do cycle analysis on 24 different futures contracts. We also do tools for techs. That's where I discuss many different charting tools and studies. A couple of recent ones I did was trading 4 different types of gaps, and one on scalping, on changing the mindset, and that's really an important video for short-term traders. Trader psychology, this is one where I discuss the personal issues that really may be bringing you challenges, getting in your way of profitability. One that I recently did was dealing with the urge to quit trading. Man, that is appropriate based on what I've talked about today. Stock sectors videos and IRA-MO. IRA-MO recently did one on long-term holdings. Should I stay or should I go? And stock sectors do these usually one a week. And a week ago, I did 9 stocks set to rise in a rotation. That included steel stocks, which you see soaring today. And I did this week 29 high-risk stocks for the fourth quarter, and some of those were in the healthcare stocks, which you see coming apart today. So really a great list. You should really become a member if you want to see those videos. Big picture analysis, I recently did one on the U.S. bond market, which is really close to the analysis, to the things that we're seeing going on right now. Style, strategy, and plan. Last one I did was on trade ownership. In other words, making a trade your own, no matter what I say, no matter what anybody else says, the importance of being responsible for your own trades. And of course, Market Week, in which we look at what happened in the last week, and I give my short-term view for the coming week. So that is our list of videos in there. You can watch all those. You can binge watch them for the next month. The special that we're offering is $16.50. All you have to do is write me an email, slim@askSlim.com. Tell me you want to become a level 2 member for that price, $16.50. After before the first month is over, you can just cancel it. You don't have to stay on anymore if you want, or if you like it, you'll just stay on and it'll renew at the $33 a month regular price. So it's worth it just to binge watch this. You're going to learn so much from what I've learned about the markets and trading in the last 43 years. I just don't know where there would be better assortment of information. And I do a lot of teaching around my cycle analysis that you see. So if you're interested in that, that will be very valuable to you also. So that is our special for the week. Write me, slim@askSlim.com. All right, so now we're going to get into our best and worst stocks for the week. Basically, what we do is we focus in on the weekly charts, and I do then illustrate my cycle analysis. For the best stocks of the week, the group that basically was the best group was the steels, like I said, and those were in my list of favorable stocks for a rotation, and we seem to be in a rotationary period. Let's take a look at a couple of those stocks right here. The biggest stock in my universe for the week is Schnitzer Steel, and this is an example of our cycle analysis. So the generally when we have dotted lines, you could see that is our projections in there of the existing cycle that's going on. A cycle is measured from low to low, as you can see, and what we look for is repeating distances between important lows, and that gives you the cycles. And when you get a cycle like this that rallies and only falls off by a little bit, the probabilities are high you're going to get a big move after that in the next rising phase, and that's certainly what you got. Schnitzer Steel up 10% on the week and looking solid. U.S. Steel is one we really thought had a high probability of moving to the upside. We mentioned that it is a potential covered call candidate, and you can see in here that it is moving up in this green zone. We think it's going to get up here at worst, challenging the $30 area pretty soon. So U.S. Steel looks really strong. AK Steel up 4%, Nucor up about 4% on the week also, and that is a good looking group. The next thing we're going to look at is Walmart and Target. Now, Walmart was one of the stocks that we really liked, and we thought it had a very favorable pattern. Also, we loved that it was really making a big move into online e-commerce sales with massive growth, a growth rate 2.5 times the size of Amazon's growth rate. And that we believed was going to get the stock to move on the upside. Well, upside it did. As a matter of fact, it exploded. Here is a 9% gain on the week in Walmart. And you can see in here, let's just look at these last cycles right in here, that these were 2 bullish cycles in a row. The probability of another bullish cycle was very high. Bullish cycle here, bullish cycle here, bullish cycle here. So there we are. It's moved up past the 100% fib extension. We'll be putting in, oh, we did already, sorry, the 1618 fib extension up at 91.85. That's about 5 points more from here. That should be easy for this stock. We really think it's just reborn in here, and that we're going to get a lot of buying coming in. Target is the next one, TGT. You can see that right there, and this is just week 1 on the upside in this cycle. Target is getting up through this resistance zone that's really had it stalling. You could see that. So our target on Target is around 63.5. We don't think it's as good or competing as well as Walmart is, but overall, it's a very good pattern. This is week 1 on the upside. The probability of topping in, the first month is very low. So we expect another few weeks at least on the upside in there. Semiconductor stocks overall have been very, very strong. AMD, Nvidia, those stocks have benefited from the Bitcoin phenomenon that is going on right now, and AMD is the one we're going to look at though, because it had a solid gain in there of 7%. And you can see right in here, as Bitcoin moves up to 58, and they have technology that miners, the Bitcoin miners use. So this looks easily to us like it's going to move to a new high. We'd look for a move over 16 in AMD. One more stock to look at in the best of the week. Surprisingly, there's not a huge number of stocks. And we're going to get into the period of earnings coming up, so there'll be a lot more. This is Twitter. Now, Twitter to us looks like, and we have mentioned for the last several weeks, that we thought that it was going to move up. It really looks like there's some sponsorship coming in here, and there's no real news going on right now, and except for the fact that there's extremely heavy use and thousands of topics and issues that are hot out there right now. So the users are just very active, and we think that's got them a lot of buying coming in. Truth is, as you see, I have it stalling at the 78.6%. Truth is, it could move up to challenge this high and then follow this pattern and then do this. So I'm thinking this is a really nice pattern, and I see, anytime you get an opportunity to buy this stock, it would be a stock that I think you should be considering for the long side. That's the few stocks that we had that made big gains in the best of the week. Here comes the worst of the week. All right, for the worst of the week, the stocks that moved down the most actually happened on Friday. That was in the 3D printing category. For the 3D printers, Hewlett-Packard has always been a threat. Hewlett-Packard has had some periods where they started and stopped in the 3D category. And Stratasys and Triple D have had their times when they did really well based on seemingly having a near monopoly on quality 3D printers. We still think that the 3D printing industry is in its infancy. There's going to be massive medical uses and much more in the industry. But what happened was that Hewlett-Packard says they're stepping back in. They're going to expand in the 3D printers, and that has caused difficulty for Triple D and Stratasys. Take a look here as we look at Triple D. One thing that was really cool earlier in the year was that we saw this big triangle forming in here. And we said that once it broke out of there, and it did it right on the projected cycle low, you see that right there? Here's your cycle lows right in here, almost perfect alignments. Here was your cycle low right over here. You see that? Rally time went nowhere and failed, and now broke under this key level. That is a cycle violation. So this Hewlett-Packard news, which knocks it down 11% on the week, looks like it's going to continue to bother this stock all the way out into January. That's where it projects on this cycle violation, and that is a bad sign when you get it. It's a very high probability that the stock is in a lot of trouble, and the next down leg has just begun. SSYS Stratasys, the exact same thing. This has got some range envelopes around it, but this one also breaking down and pointing to mid-December before that time period is over. So these stocks are looking pretty bad. When you look at the 3D printers, I would definitely say, if I had a long position in here, I would think about whether or not I wanted to wait this one out. The next stock, and by the way, 3D, when you look at the 3D printers, there's a competitive thing there going on. A lot of stocks that have fallen recently have been on analyst downgrades. There's not a lot of earnings out yet, and a lot of downgrades from analysts during this last week. Juniper is one of them, JNPR. This one had a number of analysts that had downgraded it, and then on Friday the company came out and warned. So you got to wonder whether these analysts were in the know that something was going to come. I just showed you on 3D and Triple D and Stratasys what a cycle breakdown was. Well, here you can see again in Juniper almost the same thing. Now, it's very common for when you get a negative cycle, in other words, a rally that comes down and sells off below where it began. So this is your negatively configured cycle right in here. When that happens, it's very common the next one follows suit on the downside. Rallies into resistance, fails, and then breaks down. This declines also into January. So Juniper looks like a very sick stock, and I'd be a seller in there. As usual, we have a lot to talk about in retail. We're going to take a look at DIX, DKS, which moves sharply to the downside as analysts downgrade this stock and are overall cautious. So we have quite a number of retail stocks to look at. DKS is the first one we're going to look at. And if I can get this chart up for you. There it is. And you'll see a ski slope on the downside with a few bumps. And another one of those cycle violations. Man, I don't even have this one listed in there right now. Let's just grab that right over there and show you the breakdown that happened right over here. It's the same thing right there that we saw in the previous one, a small rally and a breakdown. So what does it do? It falls all the way through the declining phase. That's all of this. This declining phase goes out into January. So you can see how many of these stocks point to a decline into January. It really got to make you wonder about the stock market as a whole. So beautiful cyclical rhythms in here, and this one a screaming negative stock. You know, usually retail stocks don't look that bad when you come into the period of coming towards Christmas, but that looks pretty bad. Take a look at DECK. There's a massive engulfing pattern right there. This stock moved up back to that target zone and then failed. This one points to a decline into first or second week of January. So there's a lot of stocks pointing to some weakness, as you could see that. Take a look here at a disaster. WBA. This is the Amazon effect and online effect in pharma. Look at this absolute massive plunge in here in Walgreens. Incredible big downside move, and this is due to bottom in the next week or two because it's massively oversold. Still, with Amazon talking about getting into pharma, other online companies, Walgreens looks like it's a huge issue. And anecdotally, as far as Walgreens goes, I happen to have a friend that has invested in a lot of these Walgreens real estate deals. So essentially you invest in the property, and Walgreens has been in a big expansion. Those deals have basically gone away. They're not favorable anymore, and I think a lot of the Walgreens growth has come from that also. So there's a lot of reasons to believe that Walgreens is finished. And that we could see the price of this stock go much, much lower than it is now. And I'm saying that after it's fallen in the last month, $15, a huge decline in there in WBA Walgreens boots. BBBY is another one that has fallen 6% on the week. Now this has got our colored cycles in there, the different phases. This red phase that we're looking at in here comes all the way out, yes, into the early part of January. So all of this downward synchronicity is speaking about trouble coming in there. ANF, Abercrombie, also down about 8%. And Sears and JCPenney, as those two stocks head towards oblivion, as they're one of your TV guys talking about Sears questioned its ability to exist. And you know, I've been questioning JCPenney's ability to exist since it was, well, over 10. And I said it was going to 2. It's now in the low 3s, so it's not all that far. So that is a look at retail. Got a few more stocks to look at here in the worst of the week. One of them is APA Apache. This stock got downgraded by analysts. This is one of the few stocks that has that's got kind of a negative look to it in the energy sector right now, as this big move down from the resistance area speaks trouble. That also points to a decline and a low out into early part of January. I've got some doubts about this. If energy holds up, I think Apache is going to hold up. So analysts have downgraded this one. I would not be anxious to sell it unless it made a new low. I think this one has some chance to hang in there based on some other stocks in the group. A few other stocks to look at: Express Scripts, ESRX. In this stock, another one, you can see the bearish breakdown, and that points to a decline into December. So that is a really negative pattern that we're looking at in Express Scripts. I talked about the HMOs that I thought they were topping. I've talked about them the last couple of weeks, and as I said, included in my list of 29 riskiest stocks to the downside. So let's just get rid of that chart because there's obviously an issue there. And let me put up Anthem is the first one we're going to look at, ANTM. And you can see a toppy pattern in here. This one I was really cautious on, and we have already a breakdown basically in here. You can see this downward trend right there that's established. So this failure is not a surprise to me, and I think that this declining phase comes out here into the early part of December. So that's a really bad looking stock in there. And Aetna is the other one we're going to look at, AET, and you can see almost the same pattern as it looks really negative. There's a little small pattern in there that we're looking for it to decline for a couple more weeks, get a little bit of a bounce, and then move down sharply again. So the HMOs in my riskiest of for Q4, and these two are stocks that are really ugly tops, and I think they are going to give up a lot of ground to the downside. Donald Trump is going to really hurt that group, I think, with most of his moves right now, and they've been really benefiting from the higher pricing out of Obamacare. We'll see if they can continue to do that when the subsidies go away. So here is a look at AT&T. Kind of a rare looking pattern in there, as it tried to rally twice up into this resistance zone, and then this big failure in here. They came out and warned this week on earnings, so this looks to me like it's likely to move down for about another month on the downside. Interesting, AT&T warning on earnings. Can that be good for Apple when AT&T is warning on earnings? Boy, I don't know about that. I just brought my iPhone 5S back in for replacement for the second time because my battery is swelling and the screen is moving away. So I've got kind of a sour taste in my mouth for Apple now. Anyway, and I think the Apple pattern is pretty negative. I'm not going to show that to you right now, but I would be looking for downside in Apple stock. That's the worst of the week, and we're going to be right back with our short-term view for the coming week. All right, short-term view for the coming week. Do this every single week where we look at the short term. We look at, like the next 4 to 7 days out there in 5 major markets. Always try to be accountable for how I did in the previous week. I strive to get to somewhere between 60 and 70% accuracy, and last week I was 40%. It was a rough week, and the reason it was a rough week was that things that I thought were going to happen a week from now happened already. In other words, the bond market bottomed early, the gold markets bottomed early, and that was either stimulated by a dovish Fed that we saw, or by the move up in Bitcoin that seemingly has people worried that there's something coming out there inflation-wise. I call it the flight from fiat currency, or there's a flight to safety, that's moving this bond market up more than a full point or around the full point here on Friday. So there is some things going on that are suspicious to me, that my basic timing was just a little bit off, but the trends that I expected to happen on an intermediate term are just kind of happening early. Light crude, that one, what I expected was that it was going to bounce, hit up resistance area, and then pull back, have a small week. It bounced but didn't pull back, and basically kept going up all week. I expected a small change in the dollar, basically, and that in a couple of weeks it would then roll over and start to move lower, but the rally in the dollar basically didn't come being worth anything at all. We thought the euro would have a small downward bias, and then it would start to move up in a couple of weeks, and it was already moving up because the dollar got softer. All that stuff is interlinked, and same thing for gold. We thought it would have another week of choppiness before setting up for getting the lows established. We thought the lows would be established in the next week, and it was established this week. So our timing was off on the intermediate, and we're going to do better in the coming week because things are a little clearer now that that happened. So we're going to start out by looking at the energy market, the light crude market, on the weekly chart. So I'm putting up /CL on the weekly chart, on the daily chart, sorry. And we will zero in on these last couple of months right here. And there you see. So this pattern in here now is pretty clear to us. We expected an upward move to be starting, and there you could see it has started. It's moved up into that resistance area right there, and that resistance area is likely to give it a little bit of problem. Now, where do I say that? What am I looking at? These smaller patterns in here that you see down here are pretty clear. In other words, you're getting 1, 2, and then 3 and 4 in each of these bigger patterns. And there's 4 clear ones in this one also. Well, maybe this one is not that clear, but there it is, those 2. So right now you could see it right here. That means that you're likely to get a little dip in the next week and then move up again. So you could see our projection is up here. We expect it just to roll over a little bit from this resistance and then move back to the upside. You can see that right there as we have a somewhat bullish bias. We're going to call it a minor dip and then up on the week. That's pretty much what it looks like. Probably not a real big up week, but always the potential for that. Bias to the long side. When you look here, you can see it's overbought and the momentum is turned positive in there. So what we're going to look for is just that little bit of a pullback in here and then moving up again, as it's a little overbought based on the momentum, but you could see momentum is positive in there. So let's take a look at the dollar, which is DXY, or $DXY, as we look at the dollar index. So here's that pattern there in the dollar. So this is, actually following this cyclical pattern really closely. You can see that right there. What that says is that you're likely to move down a little bit and then up. So we're looking for a test of 92.50 on the downside approximately, and then maybe that's for 2-3 days and then begin to move on the upside. So that makes a small change for the week when you see that. You see the momentum in here when you look at it is that it's still green in here on the dollar. You got a little bit oversold. So somewhere in here we're going to expect that this little dip is going to come and then we're going to begin to move to the upside as momentum is still strong. When I look at the euro currency, which trades mostly inverse to the dollar right here, you see the big head and shoulders that we have marked off in there. So what we expect, like we said, the dollar may be up a little bit and then down. This looks like dollar down a little bit and then up. This looks like it'll move up a little bit and then down, and then probably get to that head and shoulders projection right over there about 117.50, something like that in there. So it's not a very big decline, maybe €1 overall to the downside in this next couple of weeks that we're looking for. So we're just going to look for a little bit of an attempted rally and then moving to the downside as it fails from that resistance zone. We're going to call it probably a minor down week in the euro currency. When you look at the momentum in here, you can see it got overbought and still negative. In other words, the momentum is still red on the slim ribbon momentum chart, and that says to you the odds are pretty good that this rally is going to roll over and it's going to come to the downside again. So we'd be looking for a small upward bias occurring in the dollar, a small downward bias occurring in the euro currency. Now, often the direction that the euro moves is opposite the dollar. Often that means that since gold moves opposite the dollar, it moves in the same direction as the euro currency. That's pretty often. So we're going to take a look at the gold market, and based on what we just said, we should be projecting gold to be giving some of this gain back. So when we look at this pattern in here, what we see is a lot of strength. This is 6 straight up days that we see here in the gold market right over there. I just want to look at these last couple of cycles. And then this big cycle right over here pointing to this bottom right there that we think is important because you could see that it has started to move up in a strong way. We're going to look for a downward bias, a small down week in the gold market, getting down to maybe this 1285 number over here, setting up what could be a big rally after that. Hopefully Bitcoin will pull back, sellers will come in gold, and it will set up a buying opportunity. I think it's a strong buying opportunity for a good move, maybe to get up and test these highs after a dip in here. So we're going to look for a small down week in the gold market to 1285. Gold right now is still in negative and overbought, and that is supportive to a small pullback or a pullback in the gold market. You can see in silver that silver has gone neutral in here. It's still overbought, but that shows you that silver is a little bit stronger than gold, and the percentage gain was significantly more this week in silver than in gold. So a little bit of a pullback in the silver market. We're actually looking for it to get back into this minor support zone and then move to the upside again. That support zone is moving up as silver moves up, so we're kind of looking for something like this and then moving up here again. That would be a look at what we think is going to be a minor short-term failure in that resistance, setting up a buy, we think, coming up pretty soon. So gold and silver, I would say buy the small dips that you see in there. So that's a look at the gold and silver market. So the bond market, we were looking for an intermediate bottom to form. So we look at intermediate bottoms on our weekly charts. The intermediate bottom looks like it's already in place. We're going to look for one more potential dip in there. That would be in alignment with the maybe the flight to safety sense that we have in gold market coming in there right now. Maybe that just going away for a couple of days, but then we think that the bond market is likely to move up again. Here's the patterns that we're looking at right in here. And for ZN and ZB, we're likely going to get a dip. So that would be a minor dip. We're going to call for, if it gets up here to about the 125.30 area in the ZNs, that's the same level we thought it would bounce and fail to. So we got the bounce in the ZNs that we expected and the ZBs, but it just didn't come fast enough and roll over as we expected. So we think it's going to be in this coming week where it rolls over. But I don't even know if it's a tradable short, to tell you the truth, because I think it'll just come down for a little bit of time, and then maybe a week's long period, and then get ready for a bit stronger move to the upside in there. We're going to call one more time to the downside, up here, and then fail. You can see in here that very common that when you get up to the slim ribbon up here and you're overbought, that you're going to roll over when you're in the red, and that, you know, that agrees with what we're thinking about in ZNs and in ZBs, that they're going to pull back a little bit and likely give us a buying opportunity in there. Here's your ZB pattern right in here. We thought it would get this week up to 153.30. It's just now a couple of ticks above that. But we thought it would fail from there this week, but we ran out of time, so we don't get full credit for that. That we think is coming in here. We think that there is a dip coming, one more. It will probably last through the week, and then probably be a strong upside move coming after that. So we think that the bond market is a buy in the next dip for a pretty good move to the upside. All of that in the context of what we think is a bear market in the bond market. But we're talking about short term here. And in the short term, we think it gives a little ground, and that's a buying opportunity for short-term traders. So for the stock market, we said in the last week that we thought that there would be a minor dip early in the week, which we thought could get down to 25.28. It got nowhere near there, and the dip barely lasted a day. And then we thought it would rally again, and that basically it would be a rally week, minor dip, and then go up. That was pretty much the pattern that we got, but the amount of the dip is not anywhere near as far down as we thought it would go, so we don't really get full credit for that. Though we did think that the pattern for the week would basically be a dip and then back up, and that's basically what we got. You can check last week and you can see that that's basically what we said. Here we are still hovering around this fib extension. So you can see in here these patterns, and the alignments are starting to get clearer. What we believe is that in the next week there's going to be a decline early in the week. We could see Monday, Tuesday, potentially into Wednesday, a drop in here. That would be the same length of cycle that these last two were right in here. and this half cycle right in here would bottom at the same time. That's this one right in here. That says that you're likely to get a dip in the market, and we're going to call for a drop to that 23% right there at about 25.42. If selling got more aggressive, it could get down to this 25.30 area right there, but we kind of doubt that it's going to do that. And then we think that there's another rally. Now, you'll note that we've begun to put in a downward trend in here. We think that this cycle in here is the one that's going to bring failure, but that's a little bit too far out there for a short-term view. Basically, for this week, we're looking for drop and then rebound in there. We've got pretty much the same pattern when we look here in the NASDAQ, where it sets up for drop and then rebound, maybe 2-3 days on the downside. Target in here would be around 60.38. Craziness would be down to 6,000 area, but we don't think so. So more like that, because you see the slim ribbon coming up, and it's certainly been giving support. Down early in the week, maybe touch those highest support areas and then move back up. Now you can see in here that you have a strange situation where the market is basically trading to the upside. The momentum is strong to the upside, and the internals got oversold. So that doesn't leave much room for much decline when you see that. That says to you that, well, the market's likely to have just this minor quick dip and then move back up to the upside. S&P 500, SPX, it's got the same thing. Could you imagine that it should be showing an oversold reading right now? That says that if you get a dip, it's going to be quick, and that it's likely to rebound again. And then maybe we're a day away from the dip, because this is a situation that is pretty rare, where you're trading at the high and you're showing a little bit oversold. Man, that is a crazy situation, and says the internals of the market are supportive to getting only a brief decline and then moving up again. When you look at overall the intraday, now these are intraday momentum, you can see that, well, clearly the Russell has floundered. As the Russell has gone to neutral and has been neutral this whole last week, while clearly these have been still very strong and never giving any sign of any selling. So, you know, I talked about the importance of being long at the top, of believing the momentum, of not, you know, being in the on the wrong side of it, so that when the market really turns, you've got the energy to be on the right side of the market. And in this case, very clear when you look at that. Other than the Russell, the other major indexes are still very strong. So that is a look at the stock market for the short-term view. We'll look for a little blip to the downside and then up. Now, I want you to see this date right over here. This is October 24th, 25th, right there. I'm saying a dip down, and I'm saying a rally after that into October 24th or 25th. What am I suspicious of? Why do I get that? Well, I want to take a look at the VIX right in here. The VIX, which is following these patterns now spot on, you can see has a low due right around the October 25th. You see I have this marked off as the next period of stock market weakness. That coincides with that October 25th being a time when implied volatilities are likely to spike. That means that what we see is that this continues to erode down or move sideways or lower until that date, and that is supportive to what I just said about the stock market, that it's likely to get a brief dip to the downside and then another move up to the upside into that date of October 24th or 25th. That's the one we're going to keep our eyes on. That's the one where we think that there's a potential for an important trading top, something that we haven't seen in, I can't even remember. Can you? Wow, that's it for the day. I hope that you found a lot of the information that we brought valuable to you. Don't forget, you can see all of our videos, an amazing amount of learning that you can do for just $16.50. Write me at slim@askSlim.com. Follow me on Twitter at askSlim, and become a subscriber on our YouTube channel. And then you can get notified when we post stuff, and lots of good stuff comes up, including the Market Week show. All right, that's it for this week. I want you to be careful, because there's no doubt it is crazy out there. I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been